Morning, everyone. Hope everyone's doing well. Happy Monday. It is pretty dark. Um, I'll give you that. There's very limited light. I do have lights on. It's just super dark outside. Welcome to the week of the Fed announcement. Uh, it's a huge rate decision, right? We had a lot of data last week. We had CPI, and then this week everyone's waiting for that Wednesday data that comes out of the Federal Reserve. Wednesday, September 21st. Let me just see right here. Put into FedWatch futures again. We have to take a look at what the probability of the rate hikes are, because remember we did a jump based on the CPI data last week, where we had the introduction of an 100 basis point hike, which is the first I've ever seen of this. And if this happens, I believe the chances are still under 20% barely. There's not really data that comes out until that event. So I think the way that this is going to get structured is we're probably going to see that 75 basis point hike. Right now, actually 22% chance of a 100 basis point hike. It's slightly creeping up, but again, 78% chance of a 75 basis point hike coming up. What's been setting up right now, we had a pretty big drop overnight. Everyone has eyes on the Fed decision. So Monday, Tuesday, first 2 days of the week, I doubt that we're going to see too much activity and too much movement. We did get a decent drop overnight that actually broke the very, very key support. That is on the S&P 500 futures. We broke that 3850 area, 3850. We're pumping up a little higher right now. I'm going to give you some actually market maker data points that present delta and gamma from key support and resistance perspective. But before we dive into that, there is the potential, again, like I said, for a 100 basis point hike after the August CPI data that showed that inflation has not yet peaked, and all major indices are coming off of their worst week since June, as we've seen for the fourth weekly loss in about 5 weeks. And there's a key area in the SPX, right? Over the last 3 years, I want to mention this, that the level on the SPX that traded the most volume was 3,900. And that area broke a decent bit, and we closed below that area on Friday for the first time since July 18th, which in our view opens up the door for that low to be tagged. And I do think a bit lower. I doubt that we've seen a straight line drop back into those lows and even lower, because again, we have to take a look at what fear and greed look like. They're massive, massive components in the market, and they do present a lot of market activity realistically. And you have to look at the VIX, right? You have to look at the VIX because we haven't seen massive panic in the VIX. Volatility has not spiked yet for this thing to actually drop, not even into lows, but into even lower than lows. If I take a look at the VIX quickly here, the VIX is still hovering around like 27, right? We haven't seen that like massive panic drop that drops markets into necessary, just crazy lows that'll bring us into 32, 3,400. So as we look into that, realistically, if you're not looking at like 70 to like 90 VIX, I don't think we've necessarily seen that massive panic for a bottoming effect. So as the S&P hovers around and now well below that 3,900 area, if the 10-year Treasury yield inches closer and closer to 3.5%, and the Fed sensitivity, a 2-year Treasury note flirts with a 3.9%, which suggests that the Fed's aggressive campaign to kill off inflation is to be taken seriously. We're still going to have to see how this shapes up, because you can see that Meta, for example, formerly known as Facebook, is 5.9% off lows. You look at Google is very close to a distribution cluster that actually was printed. Let me see when it was created, because this distribution cluster, Google is now at new lows on the year. The distribution cluster that it's actually targeting was created in February 2021 into the end of March of 2021. Below that, when you drop under that 101 marker, that 99 marker, we have a massive drop that could take us into a distribution block that takes us into between 90 and 95 area. And then we have Apple that's below the 151 massive distribution block, which takes us lower into the 130s, 126s. And then Amazon, naturally, we're not that close to lows. But if you're taking a look at all these individual mega cap tech names, NVIDIA is close to the bottom end of the distribution cluster at 122, 65% off highs. You're looking at all of these individual names. you're looking at sector by sector. Even energy has pulled off a little. It hasn't pulled off that drastically. Once we see that massive drop in energy, that's when you see that quote unquote bottoming out and massive panic in the market, which probably won't happen until maybe even next year. But you take a look at all of these. Oops, sorry, just moving some stuff off this keyboard. If you take a look at all of these different mega cap names that attribute to 20-30% of the overall index, you're starting to see the potential for a larger slip to the downside. Now, the targeting area on the S&P is going to be the first target area that I have is around 373, 374, and then obviously the lows that happen throughout the year, which sit closer to that 362 target. Ultimately, 340, 320 are an ultimate target for me for the downside, where I could actually start looking for some of that longer term, some of that upside to shape up. But the way that this is going on, right, we've now dropped under the highest volume traded block over the last 3 years, and there is more potential for that downside swing, especially coming into the Federal Reserve this Wednesday, right? This Wednesday, what we're going to wait for is naturally what the rate hike decision is going to be, what the monetary policy would look like into the coming quarters, right? What the expected Fed funds rate is by the end of this year, which now we're looking at probably higher than 4%, right? Because we take a 75% hike, we're now sitting at 300 to 325 with 2 more meetings into the end of the year. If I take a look at the December probability, we have between 400 and 450, right, as a Fed's funds rate is now about, what is that, about 80% chance that we're within that band. So I do understand that's a 50 basis point band, but if you have about 80% chance that we sit between that band, most likely we are going to be looking at that area. So this week on Monday and Tuesday, and even throughout Wednesday, I think volatility really drops off on Wednesday as everyone prepares for what's going on with the Fed. Monday, Tuesday, unless there's some kind of like news, some tape bomb, some kind of catalyst, I don't necessarily think that we're going to see that much movement. I think maybe pinned, like on Friday on OPEX, we had a nice pinning, probably a little more pinned to looking at some of the downside. Again, there's a few key levels that I do want to discuss with you guys today, and they sit, right? You have a massive delta and gamma reading by market makers that sits at the 3905 cluster, which was almost entertained the overnight session, but that is going to be the target on the futures that prices do have to exceed for the bulls to actually be happy with this. Now, there's obviously levels before that. You have the 3850 to 52 area that has held time and time again Friday and even pre-market today, now up a decent bit, about 10 plus points from that area, and that's going to be the pivot for today, right? We're going to watch how price really reacts at that area. Into that, you have the 3870, which is going to be a huge resistance, and then we have to keep eyes on 3883 to 3886, right, in that region, because you get above that, you actually enter into the distribution block that would take us a lot higher. So I don't necessarily think those areas are really tested throughout the first 2 days of the week, but you start breaking under that 3852 region, you start looking at the next distribution block that opens up to the downside at that 3839.40 area. You start dropping below that, you're gonna start opening up the distribution block to the downside that could take us into the 3796 area, and then it gets really I would say fearful in the market, where you'd expect a strong pop in the VIX and you'd expect a lot more downside in this market. So again, those catalysts were inflation last week, and then this week everyone has eyes on the Fed. So let's see how that shapes up. There's not too much news to talk about around that in terms of main events that can affect the main event of this week. Everyone's going to have eyes on that, and we're going to watch volume to see how heavy or weak volume is into that. Other than that, there was one more thing I wanted to mention. If you want to know more about these distribution clusters and whatnot, we did post a video this past weekend talking about volume profile, how to actually correctly trade it with futures and what to look for. So go check that out if you're confused about what we talk about in these morning market updates. But other than watching that, there's a lot of weakness in the overall tech sector and massive tech names. Keep an eye on Apple. Keep an eye on Tesla that had relative strength last week. Apple, as long as it holds under 151, 152, there's going to be more potential downside in this market, right? You have Google at lows. You have Facebook, or Meta, I should say, that's 5-6% off its lows of the year. You have Amazon that's trudging lower. All these names, Nvidia that's pushing lower. All these names are contributing to the massive downside, and they're affected by these larger inflation numbers that have not been subdued just yet. So that's going to be one of the main focuses that Jerome Powell is going to talk about, because he did say they're doing everything to actually push inflation down, right? Whether it's hurting consumers, whether it's destroying households, right? You had a lot of that, and that's going to come with massive increases. So again, there is a potential for a 100 basis point hike. Do we see it? I don't know. We're going to have to wait until Wednesday. That's going to be the surprise event where you're going to see a lot downside if we get that 100 basis point hike. So what we're going to do is open up these rooms right now. I hope everyone has a great Monday, and we'll see you tomorrow. Thank you all. And these updates into Wednesday probably, and even Thursday, are probably going to be very subdued, because again, we don't have really that many data points unless something happens overnight, some kind of catalyst that happened out of the Eurozone or Asia that might affect these markets throughout the overnight session. But until that, I think all eyes are going to be on the Fed. So shorter update. Hope everyone has a great trading day. And we'll see you guys tomorrow. Let's open up these rooms and check you guys there.